Ladies and gentlemen of the XRP community, welcome to an in-depth examination of current market developments surrounding XRP. Today is November 15th, 2025, and XRP is trading at $2.25, reflecting a 12% increase over the past 24 hours, with trading volume surpassing $4.2 billion across major exchanges. Shark Tank investor Kevin O'Leary provided a detailed commentary on Bitcoin's structural limitations during a recent interview, stating that a proposed US strategic Bitcoin reserve would face significant regulatory and practical barriers due to its primary role as a speculative store of value rather than a transactional asset. This assessment, shared widely on X through accounts such as at John Squire with over 80 engagements in the first hours, serves as a reference point to contrast XRP's design for high-efficiency cross-border payments. This presentation is for informational purposes only and is not financial advice. Always conduct independent research before making investment decisions. To understand the context, begin with the foundational architecture of the XRP ledger. Launched in 2012, it employs a consensus protocol involving independent validators that confirm transactions without proof-of-work mining. This mechanism achieves final settlement in 3 to 5 seconds at a cost typically below 1 cent, regardless of transfer size. For comparison, traditional correspondent banking networks processing the same $240 million international transfer, cited in today's X post by @DonahueGeorge, can incur fees exceeding $50 and require multiple business days. The ledger's base throughput stands at 1,500 transactions per second, with parallel processing upgrades demonstrating capacity up to 65,000 transactions per second in test environments. These specifications position XRP as a neutral bridge asset within global value transfer systems. Ripple, the primary contributor to the XRP ledger ecosystem, maintains partnerships with more than 300 financial institutions across 55 countries. Their on-demand liquidity product replaces pre-funded Nostro accounts with real-time XRP conversions, reducing capital lockup and operational friction. Quarterly reports indicate over $30 billion in annualized payment volume facilitated through this service in the most recent period. Escrow mechanisms hold approximately 40 billion XRP in scheduled releases of 1 billion per month, with unused portions returned to escrow, ensuring predictable supply dynamics. The total supply is fixed at 100 billion XRP, of which over 55 billion circulate publicly. Each transaction burns a minimum of 0.00001 XRP to prevent spam, introducing a measurable deflationary effect over time. Regulatory clarity remains a cornerstone. The 2023 US court ruling determined that XRP itself is not a security when sold on secondary markets, removing a major overhang that previously constrained institutional participation. This distinction enables clearer compliance pathways compared to assets facing ongoing classification debates. The upcoming ISO 2022 standard, mandatory for international messaging from November 22, 2025, aligns directly with XRP ledger capabilities. Financial messaging systems worldwide must adopt this interoperable format, and XRP's native support eliminates the need for retrofits required by legacy protocols. The Federal Deposit Insurance Corporation is actively piloting frameworks to extend insurance coverage to qualifying digital assets held in custodial accounts. Internal discussions, referenced in industry analyses shared on X today, prioritize assets with demonstrated compliance histories and low counterparty risk. XRP's decentralized ledger structure, no single entity can freeze or reverse confirmed transactions, meets these criteria. Ripple CTO David Schwartz has publicly detailed this attribute. Every account in every jurisdiction accesses XRP without risk of default, seizure, or clawback by intermediaries. Market data provides additional layers. The 14-day relative strength index for XRP/USD sits at 68, indicating momentum without entering overbought territory above 70. Open interest on perpetual futures contracts has risen 18% in the past week, signaling increased capital commitment. Historical patterns following regulatory milestones show median returns of 180% within 90 days. The 2023 partial victory against the SEC preceded a 300% advance over subsequent months. Community discourse on X offers real-time sentiment indicators. Account at STEPHISCRYPTO received 822 engagements on a post reiterating the immutable supply cap. No way to create more XRP. The code doesn't exist. Supply is 100% fixed. Analyst at King Current Crypto published a thread revising prior bearish stance, highlighting ISO 2022, readiness and institutional onboarding pipelines. These discussions reflect a broadening narrative shift from speculative positioning to infrastructure evaluation. Addressing frequent questions systematically strengthens understanding. Concern 1. Perceived centralization. Validator distribution includes universities, exchanges, and independent operators across 6 continents. Any entity running a node contributes to consensus. Concern 2. Adoption velocity. Santander Bank's OnePay FX application, live since 2018, processes consumer cross-border payments with 40% fee savings attributable to RippleNet integration. Concern 3. Price volatility. Utility-driven volume absorbs supply shocks. Quarterly escrow releases represent less than 1% of daily trading volume at current levels. Scenario analysis grounded in observable trends. Scenario A. FDIC insurance framework finalized in the first quarter of 2026. Custodial platforms enable insured XRP exposure, attracting 0.5 to 1% allocation from $10 trillion in bank-managed assets, equating to 50 to 100 billion potential inflows. Scenario B. ISO 2022 full activation. Daily settlement volume through compliant corridors increases 25% year-over-year per Swift migration projections, with XRP capturing a proportional share via existing partnerships. Scenario C. Exchange-traded fund approval. Precedent from Bitcoin and Ethereum spot products suggests initial inflows of $5 to $15 billion within 60 days of listing, amplifying liquidity and price discovery. Tokenomics merit extended review. The burn ledger is publicly auditable. Over 12 million XRP have been destroyed since inception, with daily rates correlating to transaction count. At current activity, approximately 2 million ledger closes per day. This equates to 20 XRP removed permanently. Compounded annually, the effect reduces circulating supply by roughly 0.01%, a modest but cumulative scarcity driver. Escrow transparency is maintained via on-chain smart contracts viewable through any block explorer. Institutional case studies illustrate practical deployment. MoneyGram utilized XRP for treasury management between 2019 and 2021, settling $50 million daily at peak with reported 70% cost reduction versus traditional rails. SBI Holdings in Japan integrates XRP for remittance corridors to Southeast Asia, processing over 1 million transactions quarterly. These examples demonstrate scalable, production-grade use beyond theoretical models. Comparative analysis with alternative networks clarifies differentiation. Bitcoin processes 7 transactions per second, with 10-minute average confirmation. Ethereum base layer handles 15 to 30 transactions per second with variable gas fees. Solana achieves higher throughput, but has experienced multiple network halts requiring manual intervention. XRP Ledger has maintained 100% uptime across 70,000 plus ledgers without interruption since 2012. This reliability metric is critical for financial institutions operating under service-level agreements. Global macroeconomic tailwinds provide additional context. Central bank digital currency initiatives in 110 jurisdictions require interoperable settlement layers. The Bank for International Settlements Project Agora explores tokenized commercial bank deposits on shared platforms. XRP Ledger is among protocols under evaluation for public-private bridging de-dollarization discussions within BRICS nations, highlight demand for neutral, non-sovereign settlement assets. XRP fits this profile by design. Risk disclosure remains essential. Cryptocurrency markets exhibit high volatility. Past performance does not predict future results. Regulatory environments evolve rapidly. New policies could impact accessibility or taxation. Network upgrades, though rare, require community coordination. Investors should assess personal risk tolerance, diversify holdings, and consult qualified professionals. Summarizing core observations. Kevin O'Leary's Bitcoin Reserve commentary frames a broader industry pivot toward utility-centric assets. XRP Ledger delivers verifiable speed, cost, and scalability metrics, regulatory alignment via SEC clarity, and ISO 2022 positions it for expanded institutional corridors. Fixed supply, combined with transaction burns, creates structural scarcity. Community and analyst sentiment on X reflects growing recognition of these attributes. Data-driven scenarios suggest multiple pathways for continued development. XRP community. These elements form a comprehensive picture built on public ledger data, institutional reports, and regulatory filings. Engage with the material critically, review block explorers, read quarterly disclosures, track validator diversity. Share your observations on ISO 2022 implementation timelines or escrow release impacts in the comments below. Like if the analysis provides clarity, subscribe for ongoing technical breakdowns, and distribute within your networks to foster informed discussion. Together we monitor the verifiable metrics shaping the next phase of digital value transfer.